Well, hello again, Solis Wealth family. Greg Solis here with the update. Hey, first of all, I just want to pause and acknowledge what's going on with these fires in LA. My gosh, what a tragedy, just a heartbreak situation. We do have family, friends, and clients that have been impacted by this, and it just hits way too close to home. And so I know you'll join me in praying and keeping them in your thoughts and prayers for the people in LA. And boy, it's just such a tragedy. And I know we'll all pull together to do what we can to help and be there for them all. So join me as we move forward and do what we can to pray and be there for those people that are being negatively impacted. So just know, those of you that are watching this that are in LA, know we're here for you. Market-wise, well, last week was an interesting week. This is a typical example of good news is bad news and bad news is good news. But what do I mean by that? Well, some of these numbers are coming out and showing that the consumer has been pretty strong. Consumer confidence is pretty high, and we're seeing, the labor markets are still pretty strong, and GDP numbers are looking pretty good, and so this has been challenging for the bond market, because now the market is anticipating that the Fed probably will not lower rates again until June of this year. So we think the Fed's going to take their time in lowering the Fed funds rate. And so the market's got to price that in. When interest rates go up, so we're seeing the longer, and the 10-year Treasury got all the way up to 4.8%. That's the highest it's been since 2023. That was a big move from about 3.5% all the way back up to 4.8%, simply because the market is anticipating that the economy is going to remain pretty strong. That, of course, also creates some inflation fears. And so that's what's been happening for the last, call it month or 6 weeks or so. The good news is the consumer price index came out last week, and it was actually only up 0.2% for the month of December. That was great news. And so we had a really big midweek rally. Market made a big push, up almost 1.5–2% on the S&P 500. So that's the good news, because inflation seems like it's remaining under control. So if inflation can remain under control and we can have a strong economy, we're going to get the best of both worlds. But the market has got to recalculate what the valuation of equities are based upon higher interest rates. And so that's why we're seeing this little pullback. The stock market measured by the S&P 500 was off about 4% in this recent correction. We bounced back about almost 2% from where we were. So we almost got half of it back in that midweek rally. And so we're seeing some movement on the positive direction, but bonds have been pretty challenged here. So that's what's been kind of going on. We still feel very optimistic about 2025. Again, always cautiously optimistic, and always understanding there's going to be a lot of volatility. And there's a lot of unpredictable things. But it does feel like we have the tailwind with interest rates coming down a little bit. The economy is pretty strong. With the new administration, perhaps there'll be some deregulation and some tax reductions. We might see lower taxes, and so that all might be a tailwind for the overall with the equity market. So that's what the market's been doing. But it's, again, good news is bad news is good news. So we're going to have to watch it very carefully. So in the meantime, if there's any questions or concerns, never hesitate to call. We're here for you. Again, my very best to you and your families in 2025, and we'll look forward to seeing you soon. Take care and God bless.